Welcome to Illuminati Silver. We tell you the truth about silver. Today we're addressing the question, what happens if the US dollar fails? And what can be done about it? Introduction. The US dollar has been the world's reserve currency for decades, powering the global economy and representing financial stability. But what if that stability cracks? What if, one day, the US dollar collapses? In this video, we'll explore the scenarios that could lead to a dollar failure, the government's likely responses, and the ripple effects this would have on American citizens and the world at large. Let's dive into what could happen if the US dollar loses its value. How the dollar could fail. Hyperinflation scenario. One possible path to dollar collapse is hyperinflation. If the government continues excessive spending and debt without a balanced budget, the Federal Reserve might respond by printing more money to cover expenses, leading to inflation. Over time, if consumer confidence fades and inflation skyrockets, prices for goods and services could spiral out of control. Examples like Weimar Germany and Zimbabwe show how devastating this can be, eroding both savings and purchasing power. Global de-dollarization. Many countries are moving towards de-dollarization, or replacing the dollar with other currencies in trade. For example, alliances like BRICS, that's Brazil, Russia, India, China, and South Africa, have been exploring alternatives, while countries like China and Russia are working on their own reserve currency. If the dollar loses its role as the default trade currency, demand for it would fall, weakening its value. Geopolitical tensions and sanctions. The US has used the dollar to enforce international sanctions, but as geopolitical tensions rise, nations targeted by sanctions are motivated to find ways around the dollar-denominated system. If alternative systems become viable, the dollar's global influence could wane. Loss of confidence in US government debt. The US dollar's strength also depends on trust in US Treasury bonds. If investors lose faith in the US's ability to manage its debt, they might sell off their dollar holdings, reducing the dollar's value further. With a national debt over $32 trillion, a tipping point could see the dollar devalued as investors look elsewhere. Potential government responses. Introduction of a new digital currency. In response to a dollar collapse, the US government might launch a central bank digital currency, or CBDC. A CBDC would allow the Federal Reserve to directly control monetary policy and could be implemented quickly, providing stability in the short term. However, such a currency would also give the government unprecedented tracking and control over individuals' transactions, potentially leading to privacy concerns. Gold and silver confiscation. In the 1930s, the US government confiscated privately held gold to stabilize its currency. A similar measure could be considered to back a new currency or bolster reserves. Although controversial, this approach would help the government acquire assets to support a stable currency, albeit at the expense of private gold and silver holders. Implementation of strict capital controls. The government might also introduce capital controls, such as restricting foreign exchange or capping withdrawals. This would prevent a mass exit of money from the economy and reduce the risk of a further devaluation. Such measures could limit citizens' ability to protect their wealth, but might be viewed as necessary to prevent financial chaos. Return to a goldback currency. Some speculate that the US could revert to a goldback currency. This could restore faith in the dollar, but would limit government flexibility in monetary policy, as each dollar would need to be backed by a fixed quantity of gold. A return to the gold standard could prevent hyperinflation, but it would also limit the government's ability to respond to economic crises. Barter and local trade networks. If the dollar completely loses its value, local barter systems might arise in some communities, with people exchanging goods and services directly rather than relying on a devalued currency. While not ideal, this could offer a temporary solution until a stable currency emerges. Repercussions for US citizens and global impacts. Domestic impact. For American citizens, a dollar collapse would mean soaring prices, reduced savings, and likely shortages of essential goods. Without a stable currency, people might struggle to afford daily necessities, impacting their quality of life and financial security. Economic inequality. A dollar collapse would likely deepen economic inequality. Wealthier individuals with assets in diversified investments, foreign currencies, or precious metals might weather the crises, while average citizens would suffer the most. Global economic ripple effects. The dollar's collapse would send shockwaves through the global economy. Many countries hold dollars in their reserves, and a collapse could create currency volatility, disrupt trade, and force nations to find new reserve currencies. This would reshape global trade and financial markets, creating a world that no longer relies on the dollar. Rise of competing currencies. In the wake of the dollar's collapse, other currencies like the euro, yuan, or new international currencies could fill the void. This shift would alter the world economy, potentially reducing US influence and strengthening emerging economies. Conclusion. The collapse of the US dollar would be a seismic event, affecting everyone from average citizens to global economies. While a complete collapse remains unlikely, it's essential to understand the scenarios that could lead to such an event. Let us know in the comments what you think the government should do to prevent this, or how you would prepare for a dollar collapse. Thank you so much for watching. We'd appreciate it if you would give this video a like and subscribe for more insights on economics and finance. Also pop on over to our sister channel, Finances Do Matter, and make sure you subscribe there. We've placed details in the description box and comment section below.